Just as in the markets, just in life. Expect the unexpected. You'll find out more about that in a few seconds. Market getting a lift today, quote unquote. Earnings galore, Bitcoin busting out. Blue Putnam at 8:20 a.m. to discuss CPI, PPI not till Friday. It's a Wednesday, and this is pre-market prep, but it's coming at you in a different way.
Coming to you.
All right, good morning, traders and investors. We had a strong rally at the end of the day. That is continuing, journeying back to 4,500, up 25 handles, 44.96 and a quarter. We'll see what happens today, see if the Bulls can fight back. The Bucks still strong, down 6 cents today, but nearing 105 at 104.79. Bonds up a few ticks after getting shellacked yesterday, 118 and 5/32. Crude quiet, up a nickel, 77.92. Gold back at 2K, down 370 at 2003. And what do we got? Silver in the red by 8 cents at 22.07. Bitcoin futures, they're ripping. They're up 22.70, just near 52K in the futures. Well, when I said this was going to be a different day today, I got a different co-host today, and we will bring him on right now. I think it's a familiar face here to the PMP crowd. Christian Fromhertz, how you doing today?
Good, cold from downtown New York City. It's about 27 degrees this morning. No snow today. They said that we were going to get a huge snowstorm, which it's always like the boy that cried wolf. They always
Exactly.
say that we're going to get a huge snowstorm. Be prepared, and then it's flurries.
All right, so we're going to start out with an over-under here. So I get a text at 7:30 this morning from Triple D that he has a stomach flu. Now, you guys, if you have a queasy stomach here, you probably don't want to hear this statistic. But what do you think the over-under was on the amount of times that he puked last night?
Oh, jeez.
An over-under. Come on.
Are you asking me? Or
Yeah, I'm asking you. I'm asking the
I
chat
don't
if they're
know.
not
This
totally
is
disgusted.
this is a horrible way to start.
In a horrible way?
I'll say 4. I don't.
30. He
Oh, come
estimated 30.
on. Oh man.
Dennis says he's here and says bad conversation. All right, so let's move on. Let's talk about the price action from yesterday. And holy macro, you had to buy the dip, but it was all about when you bought the dip.
Yeah, absolutely. I think that's it was a little bit tricky there in the beginning of the day. We had that like initial bounce. But when one of the things that I measure or take a look at during the day is just the overall breath, and
Mm-hmm.
it was horrible. And so once we got that initial bounce, I didn't think that we were going to have enough to kind of reverse. And then of course we kind of took out the lows, in the afternoon,
Yeah.
and I thought that just the breath just continued to get worse and worse. But I would say the one nice thing is we did not end on the lows yesterday. The VIX which I think is also important to talk about too, really cranked up yesterday. I think we got to like a 17 VIX or something like it was over
Mm-hmm.
17 handle. So I thought that was notable. And then of course we didn't close. It didn't close on the highs. It kind of came off to about 15.
Well, it was really amazing when it came back at the end of the day, and a lot of times you get the follow through, right? And the strong follow through this morning. Comment in the chat about this is not what the Bears want to see. Like the Bears had their day part of the day yesterday, and we've come rolling back. I didn't get a chance to figure the 50% retracement on the move yet, but we can. It's probably right around 4,500, and that's something I'd like to take a look at. But hey, Christian, let's go to your charts here, and man, we got a lot to discuss. And boy, oh boy, Lyft. I don't know what to say. I mean, they come out and they give their report. They beat by a dime, right? 18 versus 8. And I think the revenues were a little bit better too. And then they come out and they say that, or in print, that the gross margin expanded by 500 basis points or 5%. And that sent the stock just into orbit here. So if you're reading the headline, you're like, holy mackerel. They took this thing up to 1950. Were you in that price action at all? Or let's talk about Lyft here for a few minutes.
I didn't, and it's kind of to me that the screw up that they had in terms of reporting is just kind of how the stock has been acting a little bit too, or like I don't know if that's symbolic of how the company is run, because it just doesn't seem like it's been lagging obviously Uber for a long time, but you look at where the stock was, and I don't know where
It
did it.
actually got to 2050.
Yeah.
Actually, it had a bad day yesterday. Long consolidation period between like 12 and a half and 13 and a quarter. Bad day yesterday, along with the market. And I stand corrected. That stock got up over $20.
Yeah.
That got to 2050. So, boom, boom. I'm just real short. You can give your technicals and then we can talk about Uber here.
Yeah.
It just seems here. It just looks like 15. You did have a seller after everything settled down. This 15 looks like where it's going to be the battle for the Bulls and the Bears. And I will say there was a high at 15 and a quarter. I'm just throwing out the pre-market action, a couple highs at the 15 and a quarter area. And then the next daily high after that's closer to 16. But I think for this one, holding a 15 bid off the open for the laggard. And so you're in the Uber office, right? And they're like, did you see what Lyft did? And then they come out and they, a stock that's already trading near all-time highs, they come out with a $7 billion buyback.
Yeah, pretty unbelievable. It seems like they kind of trump them, in terms of the announcement, and basically come out and say, hey, here's how you do it. Forget the 50 basis points or 500 basis points, mess up that they had. And one other point that I wanted to make before I shift from Lyft to Uber is that, there's a decent short interest in Lyft. I think the short interest is 13% of the float. So of course, that sent, whenever you've got, I think,
Hmm.
short interest over 10%, it sends the shorts scrambling a little bit. So, huge knee jerk reaction to that one. But I agree. Like, I think if it can stay above 15, um, then it can maybe make a turn here. But, my opinion is always go with the better of the two. And I saw a recent post about, I think it was last week, about how much Uber is taking your market share away from Lyft. And, I actually liked the price action yesterday in Uber. I was kind of watching it. And I think, some of your stronger growth names, really kind of came in and tested the 20-day moving average and held up pretty well. So I think the trend is, certainly intact here. And, so what is it? The first ever buyback that they're having in Uber?
Yeah, yep. They're returning, some equity to shareholders here. This thing is up 7.5, almost 8%. I'm just going to give you this is uncharted territory here. You traded up to 74.62. I mean, maybe look at some numbers at the whole number of 75. Buybacks seem to like linger for a day or two. So I mean, if you're looking to sell into this, how do you approach, I mean, they're not buying the $7 billion worth of shares right now. How do you approach buybacks?
I mean, I think it's definitely it's a positive. Am I going to go out right away? And it's better when there's a specific story about like a new feature or something like that to me. But to me, it's more just wind at the backs. For Uber, it's a positive thing, and it just means like this. This is a name that I want to buy on pullbacks because that's how they're probably going to be approaching that buyback as well. Is they're going to be in there probably buying when there's a little bit of dip. I think that they can the way that they do buyback, they can kind of pick and choose what days they're going to do that. So it's just another tailwind for the stock.
It's just amazing though when the stock's trading at all-time highs, right? To see that, I mean, you don't want to get CVX,
Yeah.
right? I mean, they did that huge buyback, and that was right near the top, and maybe they're perceiving some potential weakness here. So, but right now, I mean, absolutely no weakness. Do you have a preference, Lyft versus Uber? I mean, I have a Uber app, but I'm usually with Lisa, so she usually dials it up. I don't think I even have a Lyft app.
I do. I use both. I mean, and I'm not really, I don't really have any major preferences. Like I have both on my phone, and I'll go to whichever one is cheaper.
Hmm.
For a little bit, I was noticing that there's a little bit of an edge, like
Yeah.
a rider's edge, and you could get a little bit of a cheaper ride. But the last time I went from the airport, the prices were basically in line. I have noticed that I think that you could get an Uber sometimes a little bit like the wait is less. Like you can get an Uber a little bit faster, but also it goes to the business. And I remember from their earnings what they were saying in terms of they also have the Uber Eats, right? Which is and if you look at the other stock, of course, that is in play here is Dash, and that
Oh,
stock
okay.
has also been strong too because so they have the delivery business. Lyft is not in that, and that's a pretty good market. I'll tell you, I don't use that. I pick up my when I'm ordering takeout, I go ahead and pick it up. But I know a lot of people who I hear people say, hey, well, we'll just Dash this, and I'm like, okay, really? Like that? It's even like that's how the terminology is. So I think
It's a
this stock,
verb.
yeah, exactly. Yeah, and this stock is pretty strong too. So I would prefer both of these. The one other story that with these companies that I also heard, which is not getting that much attention, is I guess there's striking for in some cities, and
Today.
yeah, and it's like just between a couple hours. It's not a full-blown driver strike, but they're like striking for a couple hours. So you may get a little bit of a chance to buy these names a little bit cheaper if that strike ends up being more than just for today.
Okay, and you've in the Valentine's Day theme, you're wearing a red shirt today?
Orange, orange.
Orange?
Thank
Okay.
you though. Happy
Okay.
Valentine's Day.
Yeah, happy Valentine's Day out there to everybody. I mean, kind of skipped that at the beginning of the show. So, all right, let's move on
Yeah.
we're staying on kind of travel and leisure. Let's go to Airbnb. Traded down $6 here. I'm looking at the report and I see the EPS gap estimate. They lost 55 cents. Slight beat on the sales, just now by 600 million. Knights and Experience booked up 98 million, 12% year over year. Revenue beat 6 billion share buyback. Christian, what don't they like about this report?
So yeah, it's funny. Another buyback too, and I think that might be the first for Airbnb too. But so you had a lot of whipsaw action there, and
Whew.
a move all the way up to 164 and all the way back down. So it'll be interesting to see if this one gets bought. The negative that kind of brought the stock down is that they said that they're starting to see demand soften up a little bit for the rental market, which is new. I think what they were like last year, it was a very strong when they reported earnings. They were mentioning that the rental market is very strong. So they did mention that they're starting to see a little bit of weakness so far this month. So I think that's the catalyst for the reversal in the stock.
Wow. I got a 167.20 print on my screen on a bracket that traded, like a million, close to, no, over a half a million shares. Then you go from 167.20, you go all the way down to 139.90.
Yeah,
Wow,
and
I'm not sure what the expected move was here, but down $6. The stocks had a nice run. As far as looking for support here, like to look for a couple lows in the same area. And that area is going to come in kind of near the pre-market low. 141.24 was a daily low. I don't know if you're going to get it. See if you get file through here, but I'd kind of be looking at this 140 to 142 area as potential support coming back on the upside. You can see a gap fill in this one, and it might be a tough gap to fill because you had two lows at the same area, right at the 48.5 area. So if you get a rebound, that's only $4 away. The stock, moving off the pre-market low. So not looking too bad here for Airbnbs. Currently trading down $6. Let's go to Upstart here, and
oh boy.
yeah, another wild child here. Upstart revenues beat. They lost 11 cents. Street was looking for 14. Sales beat by a little over 5 million, man. This company does not make a lot of money.
No.
140.91 versus 134.89. Let's you pull up your charts. Let's talk Upstart.
Upstart, yeah. I
Oh,
think in my opinion, that they have not been churning out good earnings. It hasn't just been one particular quarter. It seems like this has been a pattern with them, and I get it. I think people have been watching that. People like to look and say, "Oh, there's big short interest with Upstart and so forth," and that's a draw. But really, I think they either need to kind of turn course and have a good quarter for this to be something that I would have up on my screens more than just looking at what the earnings did, or they need to come out with some feature because I think this is going to be an underperformer. I would not buy the dip personally.
You did, man. The initial shock, boy, overreactions everywhere. You got
Yeah.
down to the 24.50 area, and that kind of lined up nice with some dailies from some lows. Well, it was actually above that. The daily lows were closer to the 23.5 area. But the fact that you've bounced $5 off that area makes me think that if you're coming back on the downside, you're going to have to be a little more choosy with your bids. You did take out 30. Let's look at yesterday's range. Yesterday's range came in. The bottom of the range came in at 32.47. So that would be resistance. I have this thing in no man's land here, really, after losing. I think before you got to get back over $30 and get a sustained bid over 30 to get your any kind of potential uptrend in place. Is there anything you like to trade with Upstart? Is this just kind of is this more in the buy now, pay later or pay never area?
For whatever reason, this gets grouped in with a firm, and even though I think that they're completely different businesses. But you go back to like what a firm did on earnings too, which was whippy. And I was listening to the CEO, come on a couple of the broadcasts, and he was like, okay, we did well, and we're not embarrassed of the quarter. And I don't know, I just
Yeah.
didn't like the sound of it. But even this, like, so I would tend to look more at, if I had to, like, the old, like, gun to head, which one would you look at? I would be looking at this one. But I don't like it either. I just think that there's better plays out there than this particular situation. And it broke to me. If you look at yesterday and the price action that we got yesterday, and I know that we're going to get to this, but when you had the overall market fall as much as it did, right, you want to see some fight back in names. You don't want to see like, if there's names that just basically closed around the lows of the day, versus names that really
Huh.
had came back and almost, there's a bunch of names that came back and were almost unched for the day. Like, that's where I want to be in this market. I want to be in the names that people looked at yesterday and said, hey, I got a dip in the name, I'm buying. To me, this was not one of those
Good point.
names. Yeah.
Good point. Good point. Using the market. Okay. We're going to bring in our guest a little bit early today. So let's go to him right now. Lou Putnam, the former economist at the CME, joining us here a day after CPI. Happy Valentine's Day to you. I got to ask you, like when you sent me that email, you said you were going to see Tina Fey and Amy Poehler.
Yeah, we're in New York for Valentine's. They have a great comedy show, and they're at the Beacon Theater, so we're going to enjoy it.
Oh, that's tonight then.
Yes,
Okay, another important question. Are you going to take an Uber there or a Lyft there?
we're going to walk. We're staying around the corner.
Okay. All right, Blue. Wow. What a reaction to the CPI numbers. And after I saw it, after, the market tanked like it did, and, Dennis, came back on, and, we're talking about, you know, it was higher. It was hotter than expected. Talk to us about your expectations for the for the number and how the market reacted.
Well, I wasn't expecting it to tick up the 1/10 it did on the month over month. So, it's a little hotter for me too. Uh, but when you look at it, I mean, these numbers, economists aren't that good at getting every 1/10 right. And there's a decent amount of volatility in the monthly numbers. So I don't see anything really different going on. If you look at the year over year numbers, they actually improved a little bit. It was the month over month that surprised people. People are looking at the month over month now more than the year over year because Jay Powell told them to. He said, I gotta get more confidence. And so you get more confidence each month. But if you look at the year over year and in the CPI, not even the PCE, but the CPI, and you take out shelter, you've been under 2% for like 6, 7 months. So you're still there. Didn't change yesterday. The problem yesterday was in shelter, not shelter, services, sorry. And services are going to be higher than goods. There is no goods inflation left. So you're just averaging services with goods, and you're getting your inflation rate down. So I didn't see any major change. Jay Powell already told us they're not cutting rates in March. An amazing number of people didn't believe him, but he was pretty adamant. So I think they believe him now. That's what came through yesterday. It could be July before they actually start cutting because they definitely want to see a few more months.
Okay, I just got your charts here, Aaron. If you could share my chart here, the annualized inflation based on the last 6 months, pretty accurate description here. So it really, the core, it was a little bit hot. You mentioned the shelter there. Let's move on here
Wait a
to
minute, stay on this one just 1 second.
sure, go ahead.
This chart is becoming more important because of the idea that the Fed needs to gain confidence. So we're just looking at the last 6 months of data, looking at the month over months and annualizing that. And so you can see the CPI core is just a touch higher than the CPI, but you take out shelter and you're in great shape. So that's what people are looking at to gain confidence. By the way, the Fed does not target the CPI. It targets the PCE core inflation rate, which is lower.
That's a
Okay, it
great
looks like,
point.
yeah, go ahead, Christian.
Yeah, it's a great point. I mean, the CPI is not the only measure, certainly out there, and Blue, hits the nail on the head. I mean, their favorite inflation gauge is the PCE deflator. Now, of course, like the market for whatever reason has been more focused on that number, but we'll see. And we've got a number. Clearly the expectations for a March cut really moved down into basically nothing, which is I think is good that the market's not implying that that's going to happen anymore. But that said, I mean, we're going to get so much more data that comes out too. We don't know if this report is a one-off, and as Dennis said yesterday, it's a tenth of a percentage point,
Yes.
above expectations. It's really, you know, in all things, it's not that big of a deal to see just 1/10 of a percentage point higher. We'll
Oh
see
yeah.
if
If,
this is a
if you
trend.
get if you get focused on a 1/10, you're not paying attention to the volatility of the data. It's like asking a
Exactly.
weatherman to get everything exactly right. They're not going to do that. Neither the economists. By the way, this chart is the PCE core, and this is the one the Fed watches, and it's been below 2% on this 6-month basis for all of 1 month. And that data comes out at the end of the month. So, it could easily tick up 1/10 too and, be back there. But what it's telling you is inflation really is pretty close to 2% on the core basis that the Fed looks at. They're not far away. They just want more confidence.
But why do they act like they're so far away, and then in the same breath, so ready to talk about cutting interest rates?
Well, if a recession were to develop, then they would have to cut rapidly. But if the recession does not develop, and it looks like we're going to cruise into the first and second quarters of this year doing just fine, labor markets are fine, then it buys them the time. And they really don't want to make a mistake. They would rather be late because they don't feel any urgency here. The economy's doing fine. They don't need the urgency is not there. So they think they can take their time. I really wouldn't argue with that. I mean, if I would probably have cut sooner because I'm already convinced, but they're not, so they can wait.
Just as they were slow to react on raising rates, and you're kind of foreseeing that same scenario here. They were late on, excuse me, raising rates. You think they'll be just equally as slow in bringing them back down?
As long as we don't have a recession, the answer to that is absolutely yes. Um, the thing is that what we saw in the market yesterday just reminded us of how important rates are to the market,
Mm-hmm.
but the rates are not that important to the economy. The economy, the jobs market is dancing to a very different drummer than the S&P or the Nasdaq, things like that. So if they slow on raising rates and slow on cutting rates, doesn't matter to the economy, but it does matter to the equity markets. By the way, this last chart is kind of fun. This one takes you back to 1960, compares the federal funds rate, which is the lighter blue line on top, with PCE core inflation. And it really tells you that the last decade is the outlier, where they kept rates just so low for so long. And that's why we had such great bond and equity markets until they started raising rates. And I think what the markets, I mean, the equity markets have to really consider is, do we need to get out of worrying about whether rates go up or down a quarter of a point and really focus increasingly about earnings? Because the Fed's going to keep the Fed funds rate above the rate of inflation, just not quite as much
No
it
matter
is
what.
right now. So I think we're in a transition period for the stock market where we're going to learn not to be quite as skittish, if you will, about 1/10 of 1% on the inflation like yesterday, and really start, like where are we gonna be on a couple of years out earnings? Which are the industries that are gonna make it? Which industries are AI gonna disrupt more than others? So I think we're about to head into a much more earnings driven conversation, which I will certainly welcome.
Blue, just a quick question for you. I mean, considering that it was just a tenth of a percentage point higher than expected, do you think it was just more about that the markets had been on such a nice run and were basically priced to perfection going into that report?
I won't argue with that. They were definitely on edge because there were plenty of people worried that this rally couldn't continue, and they got that one little trigger of information, and wow, did they sell fast? But we're grinding a little bit back today. The other market that got hit, interestingly, is gold. The higher for longer on rates is not good for gold, and the stronger, the healthier economy is not good for gold. So I think we're down below 2,000 again on gold. So that's another one that's impacted here.
Before we let you go, Blue, we got to talk about, the banking system. We got to talk about what went on with NYCB. Looking at this as, or the street at least is reacting that it's just a one-off. The higher the rates stay up here, the more these banks are going to be, upside down on their loans. And, we all know, it's not the biggest part of the market here, but looking at the financial sector here, not looking at like any individual names. I mean, this is not good for them, right?
Well, the regional banks that have a very, very large exposure to commercial real estate in the largest cities, they're in big trouble. But regional banks that are outside the big cities, they'll turn over their loan portfolios. They're not going to have much increased credit risk. They're going to be fine. Not great, of course. Their earnings are not going to be as good as you might want. But we're not talking systematic risk here or anything like that. So, and I can't figure out who hadn't gotten the message that commercial real estate in the big cities was in trouble. I was having a conversation with my dog the other day, and he couldn't figure out why people didn't already know that. That email's been out there.
Yeah, it certainly has. So, all right, we're gonna let you go here. We've been on the line with Blue Putnam. He's the former chief economist at my old stopping grounds, the CME, joining us. Well, here's one other thing. So CPI is usually Tuesday or one day, and the PPI is usually the next day. We did have some adjustments to the PPI numbers here. And then I think last month or 2 months ago, they had the PPI first and then the CPI. What's going on there with that? Are they just trying to confuse people, or just the way the numbers are calculated when they fall when they release them?
I have absolutely no idea, but as an economist, I can guess. I suspect somebody went on vacation and they just needed to alter the schedule, and now they're back.
Okay, all right. Well, hopefully it's not the same person putting out the Lyft releases for the earnings. But Blue, thanks a lot. We always dial you up around those around the inflation numbers. So I'll look on the calendar. We'll get that PCI number and we'll get you back real soon.
Right. Thanks, Joel.
Okay, going back here, S&Ps did climb over 5,000. We got the 5,075. Christian, does that become a cycle? I mean, I didn't have any daily highs or lows in the vacuum that you had in the market. I mean, we were basically trading at what, 50, 20, 50 and a quarter, and the price action didn't really give you much look at 5K. Looking at the S&P or the spiders, something. We did
Yep.
have a rally this morning. 5K, is it psychological to you, or do you have a level in between?
I'm not these big levels like that. I think it's, I guess, something to kind of keep in mind. But I'm really looking at. Can I share my screen again? Or
Yeah, go ahead. Go ahead.
okay.
Switch, Aaron. Switch them over.
Oh, look at that! You guys are on the ball. So just super short term.
Wait, real quick, Christian,
Yeah.
can you zoom in on your chart? The chat was saying it was a little hard to read.
Oh yeah. I could do that.
Thank you.
Okay,
Thanks,
I'll
Aaron.
get them zoomed in. So yeah, what I would be watching just for today and this week, right, is just this value area, and notice that we kind of came in, right at towards the end of the day yesterday, took out this particular level down here, which was 49.54 in S&P futures. This is an S&P futures chart, by the way, and then we basically got back into the range for and I am going to zoom out here just a minute. This is basically the range based on volume at price from last week. So we're basically like, as much as like as far as the VIX went up yesterday, we're basically just back to where we were last week. So to me, I would really be watching for if we break that range again from last week, which is this 49.68 level. So that's what I'm watching. I don't know if we get a full recovery. I think it's also really important to keep an eye, as Blue mentioned a little bit about what rates are doing. I think also the dollar is really important, and
Mm-hmm.
that's going to also drive your outperformance between some sectors and the other. You mentioned regional banks, and I just wanted to just go quickly just to look at that chart. And I think that they're kind of teetering a bit. Where they closed last week was a positive. And what I'm looking at here is just the daily chart. But I'm looking at the range as well from last year, and we've been above. We had a rally towards the end of the year, which part of the catalyst was was Powell changing his tune, and notice that we've given back a lot of those gains. But we'll see what the rest of this week has in terms of the PPI report. Yeah, I agree, Joel. I don't know why that they staggered the PPI a couple days later. But this is not an area that I would really want to be involved in unless we do see Powell kind of commit to further cuts later this year. And I think this continues to underperform.
Okay, yeah, I just and of course, you have to look at your levels from that day that we had yesterday, looking at the S&Ps, and y'all can look at your stocks, but the low of the day was a list right around a point from the low of last week. So I know we talk about intraday levels a lot in here. We talk about, daily levels, the pre-market, after hours action. But when you really drill down to it, the daily charts make the weekly charts, the weekly made the monthlies. And as far as the S&Ps go, the low from last week came in at 49.3775. We went to 49.3650. So if you're waiting on your weekly levels, you got a good buy there. And then I just calculated the 50% retracement, and that comes in right over 5,000. So think we got an important range here to, will be important for today's action. We don't necessarily just have to bust back above 5,000, but, sustained bid. I mean, let's go on, the close is over 20 handles away. Not like a huge update. I would like to see us just kind of have like an inside day and defend the close. The Bears, that they definitely they're hurting today, man. If they did a cover in that last 15 minutes or so, they're back underwater again. The song remains the same. Let's get back to a little bit more earnings. And then, Christian, I know you got a few topics that you want
Sure.
to cover. But let's go to Robinhood. And Robinhood, the hood up a buck 76 here. That seems to coincide with the pickup in Bitcoin here. Looking at it, they were expected to lose a penny, but they made 3 cents. Sales a beat too, 457, and they came in at 471. They grew subscribers. They did a lot of things right here. Robinhood. Let's get your fundamental comments on Robinhood, and then we'll look at the technicals.
Yeah, what's interesting is the chart has actually been looking pretty decent. It's something that I was kind of looking at towards the end of last year, that this is really kind of turning around. Let me just bring up the weekly chart.
Okay.
And a couple of things that so they are a little bit of a play on Bitcoin and cryptos. And by the way, we haven't even talked about the Bitcoin move yet
No, we
this
will.
morning, which is making like one of the most impressive moves, I think, this morning. But if you look at this chart, you're really basing out here. And, it's around 11 or 12 bucks. I have to say, like, I think it's compelling here because, not only, this name had a obviously big decline from when it went IPO, but just the fact that it's been basing, and basing. And I heard that they've got some new features that they're rolling out where they're letting you see in a name like who the buyers and who the sellers are. I don't know if you caught this, but
No, tell me about it.
yeah, they're basically saying like, okay, in a respective name, you could go in and you could say, okay, the volume for the day was like 30% retail and like 40% institutional, and there was institutional buying. So they're coming out with new features, and when I see a name that's basing like this, and they start to come out with features that people are interested in, I think that this one has a chance. So I'm interested in this one, and again, it's one of those things too where I think you have to be patient. because you could see how it's just methodically been going in the range. But I would really kind of keep an eye on this upper level of the range here, right around 1350, and you might be able to get a nice outperformance going here in Robinhood.
Yeah, look at that. You had patient buyers here at the $8 level back in November, and then it kind of got away from them. Those buyers reemerged here at the 1050 area. That was back January early. In fact, as early as the beginning of the month here at the 1050 area. Now you're getting a big pop. So, man, I don't know if you're going to be able to build that base. I think I'd like to say it come back down to $12. You had a pair of daily highs at 12.13 and 11.94, but man, just feels like with the market where we're as we are trading right now up a buck 72. I think resistance is going to be easier to identify than support, and your pre-market high comes in at 1384. And then I had to go to the monthlies here, and your next monthly high comes in at 1395. So 14, I'd have to get. I mean, in this kind of market, the way things have been just fouled through after the reports, you can use that for targets. But if you're really looking for one of these absolute gangbuster days, I think you got the Bulls will have to establish a 14 bid, a strong 14 bid. We haven't seen that yet. Let's shift over to Bitcoin here, up nearly $2,500. All the people that bought on that ETF Friday, they are now in the money. Up, let's get your comments here on Bitcoin.
Yeah, I mean, like I said, I think this is one of the most impressive moves of the day. I mean, we're now breaking through those highs, and we did this the other day. And whenever we kind of get to a level which is basically where we were when they started to roll out those Bitcoin ETFs, which it was the old buy the rumor, sell the news.
Uh
But
huh.
it really regrouped quite nicely here. So I think that this is interesting, and again, it's one of those. It's a case for maybe going along a little bit of Hood. It's for having that name, and another way that you could play Hood, by the way, is you could use it. You could basically do a pair trade, which you could go long Hood and maybe short the regional banks, which are more exposed to the move in interest rates. But yeah, I mean, I think that this is interesting. Breakout of those of the previous highs. Next area that I really see on my charts is all the way up at 61,560. I'm just going to
Oh,
check that with the see if I see anything on the hourly. But yeah, I mean, I think that I think that Bitcoin, has a real chance here, because I don't see any major resistance nearby now that
no.
we're clearing. So this looks
Wow.
pretty good, and we can begin to kind of look at some of the other names too in this space, such as like Amara, which I know has been seeing a lot of call activity recently. So this name has been, talking about names that were doing well yesterday. The crypto bunch, and I use the blockchain ETF BLOK, and that was one of your better names yesterday. So here's Mara, and this is the 1 hour chart. Let me just back it up to the daily chart. And yeah, I mean, this is not back out those highs from last month. So this could be a nice little catch up trade, maybe up to 30, 32.
I see
Um,
that. Yep.
yeah.
Yep. That's yeah, on a relative basis, you think that would be a strong 32 bid here. We're talking Bitcoin here. So let's just transition over to the dollar. The US dollar, I mean, there's a lot of people out there that are saying, "Hey, this rally in the dollar is not good for the market."
Yep.
And market still seems to shrug it off. I'm looking at the dollar index here. What's your I don't know if you like the UUP or the UUD. Give us your thoughts on the US dollar. Still maintaining right on the futures here, trying to get back at 105 at its highest levels since early November.
Yeah, what's tough this morning is both the dollar and rates. They're not really moving too much. The dollar is down 10 basis points this morning. It was up about 0.5% yesterday. So it needs to stop here. I think so. This is like a 3 month high that we're seeing in the dollar. And yeah, this is concerning. This is a headwind. I view the dollar when it goes up as risk off for equities. So just very similar to what's going. We could look at the TLT chart next, but yeah, I personally don't want to see the dollar move much higher than this, and I think it will not be good for equity bulls to see a move higher in the dollar here. So we'll see if the rest of the data this week kind of quiets it down a little bit. But if not, these are things that I have in the back of my mind to say, okay, maybe you want to make some adjustments to your trading right now, and instead of swinging for the fences, or even like doubles or triples in your trading in the equity market, maybe a little bit more, um, you know, shooting for hitting for base hits. And I know that's something like Dennis talks about a lot of times too. It might be more, and when he comes back on, it would be a great question for him to see if he's moving more of his type of daily strategy to selling the rip, and still buying the dip a little bit, but more selling the rip.
I mean, we'll hopefully get them back on tomorrow. But I think just from the way the overreaction in the market was, and we had just been going up. I mean, we just been going up every day. I think we were up like 6 out of 7 days. So, I mean, the mega bulls, they like down days, right? Because they can get back into the market. I mean, I think what we're talking about here, and really with the CPI, Bitcoin, and the dollar and everything, it really comes back down to the rates, right? And we could talk
Yeah.
the TLT here. You had the Ackman bottom. Boy, Ackman has been making some good calls. You had the top just over par there. You're pulling back. And on my charts on the TLT, half of this move from that low around 82.50 up to the high just under 101, you're coming back into your 50% retracement here at 91.61. So if you, in my opinion, you're getting near a buy zone here. I'm really not seeing anything, relative to to rates, right, or what the Fed's going to do to give this a boost. You're looking to maybe pick this up a little bit lower, get some consolidation around this area. You just think maybe just chop around between 90 and 94 for a while.
I'm worried that if we break, if we continue to break, let's say 92 in TLT, we've kind of been going for the last few months more in a sideways pattern, and
Mm-hmm.
we may be getting to kind of shift from sideways to downtrend, right? And as an equity investor or trader too, you want to have as many things like at your back or like confirming. So this is to me, if rates continue to move higher, TLT continues to move lower, this is not a good, this is would be more of a diverging type of move right now for equity. So this has me more cautious. So does the dollar.
Mm-hmm.
And, and I wouldn't personally want to see much of a move lower than where we are right now here in TLT.
Yeah, and let's just take a look at our very interest rate sensitive IWM here. We were
Yeah.
looking at it yesterday before that CPI number. We're like, back at the high in the move here, and boom, that was snuffed out. So, I mean, how excited can you get about the IWM, and with rate? I mean, higher for longer, stable for longer is what I said. What's your take on the IWM small caps?
Well, this is just, exactly what I was just mentioning a minute ago about, selling the rip and buying the dip. I mean, this thing continues to kind of trade in a range, right? This is not trending the same way that the S&P and the Qs are. And it had some really nice outperformance, leading up until yesterday. But I think this is like, as you get to the top of the range, you want to be selling IWM, right? Unless something really changes with Mr. Powell and the Fed, it's going to be that type of a market where we get to the top of the range, sell it. For now, I'm impressed. Even though it was down pretty decently yesterday and underperforming, it still held its 50-day moving average. So that's what I would watch going forward. I would be buying the dip against that 50-day moving average if you really wanted to be in the small caps. But I think that there's better places to be.
Yeah, it just seems like the market too. I mean, it's fighting the TLT, it's fighting the dollar,
Yeah.
it's fighting potential higher inflation. But you know what? That just seems to be the overall, just when you're in a bull market, you're in a bull market here. I see someone popped on here, and I'm gonna bring him. Oh, the
Let me bring
bring on
myself on.
feature. Triple D, how are we doing?
I'm okay. It was a bad stomach flu. 2 to 4 o'clock in the morning was just a
Oh,
disaster. And I'm like, I think I'm dying. And you know what? I just think I kind of got through it. I would have considered it food poisoning, but my boy had the same stomach flu Saturday night. So, and he was sick into Sunday. So,
okay.
you go the 2-day, like 48-hour incubation. And I probably pretty much had the same symptoms, like no fever, no chills, just gastro thing. Like your stomach's hurting. And then, obviously, the throw up fest, which wasn't a hell of a lot of fun. But I just heard you guys talking about the IWM, and I just wanted to come in and comment here too, Christian, because it's great points you're making, and it is in a trading range. I just want to talk about the separation that you have because, I've talked on this show a lot of times looking at the TLT and how the IWM and the TLT are often connected. That hasn't been the case as much lately. IWM wants to go higher. It's trying to go higher, but the TLT is holding it back. And then you get tech stocks that just really don't care about the TLT nearly as much. I mean, they do, but a lot of these companies don't have debt. A lot of these companies, are being driven on an AI story
100%.
that is
Yeah.
real. So, I mean, it's hard to compare, and just say, well, TLT is going down, I'm going to sell everything. That wasn't happening last year when TLT was going down. They were actually hiding out in tech, if we remember. Tech had a very good year. TLT had a very rough year until it turned around in October. So I would say, IWM, to your points here, Christian, we are still in a trading range. And until we see a significant rally in the TLT, it's hard to say we're going to break out of this IWM. So I think I'm with you. I think that this trading range that you're talking about stays intact until the IWM or until the TLT actually starts to get a lift. So
Yeah, I
Yeah.
mean it's you got your clear resistance here, and it just comes in at the 50% retracement from that late 2021 high. This is really not performed well on a relative basis, but everyone's waiting for that catch up trade, Dennis. And I guess to your point here, with what we're seeing from the inflation numbers, that's not going to be happening anytime
I
soon.
want the catch-up trade too. I mean, I have some value names. I'm a value investor at the core here, but sometimes you just got to switch up and see what's happening here. And that's why I got on the AI train here really late last year. I was buying a lot of these stocks, but I also said that I felt Nvidia wasn't as overvalued as everybody was saying when it was 400. I felt like SMCI was this micro cap potential value trade. We had talked about it even before I put it in NASA. Everybody kind of knew when I came up with the NASA acronym, the stocks I had been talking about, I was going to throw in there, and that's what I've done. And somebody was saying to me the other day, all these stocks, Nvidia, SMCI, there's no fundamentals driving it. And I don't know if I made this point on the show, but I completely disagree with that. It's all fundamentals driving it. It's the story, it's the earnings growth. Like we've had bubbles before, Christian. You've been in the markets a long time where you see stuff just go parabolic, the meme stocks taking off that had absolutely no fundamentals behind them at all, and they crashed and burned. The difference with a stock like SMCI is they're trying to catch the price up to where the earnings growth potentially could be. I mean, I don't know if it's overshot here now, but to say that this is just being driven and there's no fundamentals behind it is wrong in this case. It is all fundamentally driven here. Now, again, I don't know, but this market overshoots everything. Should the thing go straight to $1,000, which it looks like it's trying to do? I mean, when I put it in my acronym and it was $300, I thought, if it gets to 500 or 600 by the end of the year, that would be a pretty good year. I mean, a month and a half later, the thing is 800. I've rang the register on some of it because it does feel a little bit too much too fast. But I mean, this thing's up in a straight line. I mean, what? But Christian, I'm going to ask you this question though. Let's just say you're long some of these stocks like Nvidia and SMCI, and you believe in AI, like I do myself. I go to sell SMCI, I go to sell Nvidia, I go to sell AMD. Where am I going? Where am I going for the AI trade? What's the trade? Am I going to Palantir? I mean, where am I going? So where does that money go to?
Well, a couple of things. I agree with you about the fundamentals. Yeah, I mean, SMCI put together phenomenal numbers. So 1 week from today, guess what we have? Right, we've got Nvidia reporting earnings. So I think, and if you notice the price action yesterday and how quickly these things are being bought up on the dip, I mean, there's still that buy the dip mentality in these names, and these names just did so much better. Going back to what you were just discussing with IWM, but I think that this will continue until you have that next data point of the fundamentals. And if the fundamentals are there again for Nvidia, then I think the show goes on.
Yeah,
If it doesn't, then it could be a rotation. Another group too that I thought was acting really well yesterday was the cyber group. Now, there's
they've been
some.
unreal.
Yeah, I mean, so you look at CrowdStrike yesterday, and CrowdStrike, the dip was bought, so much
Instantly,
faster. Yeah, instantly.
immediately.
Exactly. So I think that group is still alive and kicking too. And if you see, for whatever reason, like if Nvidia doesn't blow the doors off their quarter a week from now, like that could be an area that unfortunately just hasn't really had much of a dip because,
But
yeah,
but I'm just going to take, and just say here on AMD, for instance, they did not blow their numbers away.
correct.
AMD actually's quarter wasn't that good at all. There's obviously the potential here, but that dip still got bought. Like, I think if Nvidia comes out, and I honestly think they're going to blow the numbers away. I really do. I don't think they're going to come out and miss. But the bears are holding to this. Wait till next week. Wait till next week when Nvidia reports and they don't meet the higher expectations. This thing's going to tank. Dan Nathan's on CNBC every day calling the top on Nvidia, and he says this could fall 200 points just like that. You know why it's not going to fall 200 points just like that, in my opinion? Because there's so much underneath demand here. Joel, the AMD quarter was not good, and they bought that thing right back. I mean, you think this Nvidia story is going away? Like, does Dan Nathan just think it's just a bubble? We're not going to go. It's this AI story. So I think that there's so much underneath demand. I think even if Nvidia didn't hit the higher expectations, it could fall $100. But you know what? I think money managers be like, oh, thank you. I can get in this stock because you know what? Tim Seymour made this point a couple weeks ago, too. Imagine being a money manager and you don't own Nvidia in your long-term portfolio. You're worried about your job, is what he said. And I mean, that's the truth. Like, you're a tech investor. If you got a tech fund and you don't have Nvidia in there and it's going like this, you're buying any dip you get. And that's why yesterday the Nvidia dip gets bought before anything else. That's why the CrowdStrike dip gets bought before anything else. Because these are the stocks that have been the performers. These are the momentum names that people want to see in their portfolios to say, my money manager knows what he's doing. He's on these. So the underneath demand here is incredible. But let's throw out this scenario where actually Nvidia does beat their numbers.
Oh.
I mean, the pain trade could still be somewhat higher here because I don't feel like everybody thinks everybody's bullish Nvidia. Every single guest that comes on Nvidia on CNBC says Nvidia is a bubble. I think the driver here is just the fact that a lot of people don't own it.
We were talking about the $700 level and how Nvidia it had that big pause at 500, didn't blink at 600. I was waiting to see what happened at 700. Well, it blew through it. It got nearly to 750. But look where that dip came down to yesterday. I mean, if you're looking at your daily highs and lows, well, you didn't quite get to the 4-day low at 694.55, but you did get under that psychological $700 level. So old-time closing high. I just will alert our traders and investors, you did have a triple close area here at the 722 from the last 3 sessions. So if somehow you get a dip, that would still be green on the session. The 722 is a triple close area. All-time closing high 722.48. Triple D, we only have a
Before
couple.
we get Christian, I want to just go to Christian one more time here. I know we got to go up against the clock, but Christian, give us a couple other tech stocks. I mean, that you're looking at here, because I'm still, looking for more tech stocks. I was asking Gene Munster even on Twitter. I said, is there any tech stocks out there that haven't gone yet, that are sleepy, that are setting up, and then maybe they've gone, but just in a consolidation period that you think are ready to go? Because you're a momentum trader. I know you've got a few you're hiding there. Is there anything that, sleepy tech trades that maybe have been in consolidation periods for a while that you think, we should be buying on the recent dip that we just had?
Well, I mean, I like this. What I was really focused on yesterday was just noticing what names were holding up very well or, coming back really quickly.
Hmm.
I like this VRT. Now, this is another play too on tech and a little bit of like what SMCI does too. But I think this is a nice name in here too to trade versus, support of around like 58. So, I was looking at Palantir yesterday. I actually tried to trade a little bit yesterday, and just decided I didn't want another position. Considering the volatility, when the VIX shot up to 17, but VRT is a name that I'm watching. Even just I tend to sometimes even look at some of the lower volatility names, and like even like IBM has been kind of hanging out here, and I do look at names that
I looked at that yesterday, Christian.
yeah, I mean,
IBM.
I look at the names that had good earnings, and say, okay, you know, how much are these things pulling back, and is it a little bit of a buying opportunity? So, yeah, I mean, and then there's this guy too, Microsoft. Microsoft kind of came back in. It wasn't the strongest name yesterday, but that's also a name that I'm watching too, versus support. Like you could use a 20-day moving average. I'm watching basically the 400 level in Microsoft. And again, just sticking right now, like if rates are going to do what they're doing and the dollar is going to do what they're doing, I feel a little bit better in something like even like an Amazon too. Amazon had good earnings, hasn't really done anything, right?
Yeah.
And I'm also watching not physically, but Netflix.
Ah,
Netflix is also a name too that, again, it doesn't have the AI theme or anything like that, but I just like the fact that it had really good earnings, and it's not extended here. So I'm watching this one too to say, okay, if it kind of holds support, right, I'm going to try to get back involved in this one.
Dennis, before I let you go, I don't know how you were feeling after hours and stuff, but there was just some incredible moves there.
oh, the wicked
Yeah.
reversals. And you guys covered it well. I listened to the entire show, and Christian, you did a fantastic job as always. We know what we get with you. That's why when I'm sick, I'm like, I was even thinking the same thing before Joel called you. I was like, go get Christian because we know Christian do a really good job here, and the
Thanks,
chat loves
guys.
you. I mean, the wicked reversals. You started with talking about, obviously Lyft, and that was on the typo. But then Airbnb was actually before Lyft, and it was up at like 167. Then they just pull the rug and they tank the thing. And then I watched the Lyft reversal. So then I'm like, well, you know what? Upstart was down like $8, and I'm like, I'm buying some Upstart here at 25, not because I like the company, but because they're reversing stuff, and they're looking at dips. So I actually did buy some Upstart down at 25. I sold it later in the session at 27. So I didn't quite, it's up at 28 here now. But I mean, just I waited to I didn't just, and again, when you're doing these reversal trades, I want to make this point very clear. Don't be a hero and be right out there right away, because you could be on Lyft shorting at 14, 15, say it's overdone, and it goes to 20. Wait till the weakness starts to show. With Lyft, you couldn't because it just tanked. I mean, that was an incredible fall. But you just got to be careful with the Upstart buy. I waited till it stopped going down. Like it was sitting down here for like 15, 20 minutes, finding its legs. I'm not always doing that, but it felt like it was like reversal night in earnings. So I felt like we could like lift up there a little bit here, pun kind of intended. And that's what we got. So there's a time and place to be a hero, but try to wait until you actually start to see the strength. Again, Brian Shannon always saying, even on the short-term charts, buy the strength after the dip. Don't just come in there and buy that initial dip. So I mean, but last night, Joel, the earnings reversals were nothing short of incredible.
Okay. All right. Well, we're going to just wrap things up here. Dennis, thanks a lot for coming on, and I appreciate it. I mean, you did have the dip yesterday. Also, that Upstart had earnings. So, to take it through the report, I think, or you did the
No,
trading
I bought it after the report.
after the report.
The only
Okay.
reason I did that trade was because I saw what happened with Airbnb.
Okay.
Obviously, Lyft was done on the typo, but it felt like earnings reversal nights. My job is to recognize patterns in trader behavior, and these short-term patterns sometimes, just show up at night. Like there's no algo programmed. Oh, what we're doing, but you could see there was multiple reversals last night. I'm like, well, maybe Upstart gets a little lift here, just because it's probably an overshoot too. These algos were overshooting left, right, and center. We also saw a firm last week was the same story, and I obviously couple Upstart in with the firm, where Affirm had reported, and then it chopped around a lot. It actually was way down as reported. It came all the way back up to even, and then it started to leak afterwards. So, I'm already out of the Upstart trade. I don't know where it goes from here, but there's those short-term trades that you can extract alpha from. I mean, that's a 10% trade there. When you buy it at 25, and you
And
bring it up
sell
to
it
27,
27.
20,
Yep.
yeah, 27 and change. I mean, these are real trades. Now, again, there's risk. So, I'm not going all in, put my whole trading account buying a dip on Upstart, but we can recognize patterns. That's all of this trading is about. So, but Christian,
All right,
again, thank you very much, Christian, stepping in for me, because I'm feeling good. Like, I'm feeling pretty good, but I just didn't want to push it here when I was up all night with them nauseous.
No, it's more important that you're feeling good. I just
My pleasure, and feel better, by the way, Dennis.
What do the Bears have to do today, Christian? That's what I'm going to ask you. And Dennis, I'm going to ask you too. You had it was the first sign of life in the Bears in weeks. And now it's in their face now. What are you looking at here for the Bears to kind of
Bears.
man? I mean, right now it doesn't even look like we're going unchanged. Is this just another a false break? Is there anything the Bears can do to turn the tide?
I'm watching TLT. I'm really concerned that if rates continue to go higher, if TLT continues to go lower, I think that's a big headwind for equities, and things like IWM, solar companies, companies with higher debt, they're really going to underperform if that's the case.
Okay.
And that's where the value catch-up trade maybe lags until we start to see some life from TLT. Like, we started seeing life, and Christian making such a fantastic point. In December, really, after Powell talked about, potentially lowering rates without the inflation data, we were still kicking up at 4%, but then he started talking about it. Well, that's a full pivot. That's a green light go for the IWM. And we know after that, the IWM ripped from 185 up to 204, 203. Well, now, we've pushed it back a little bit. So those people who are all excited about coming in here, buying, the IWM, the value catch-up trade has been postponed. It's not eliminated. It's not just gone, but it's been postponed here. We're talking about a May cut. Maybe some people even talking about a June cut here now, not a March cut. So that's why it's well, I'm going to sit around here and watch all these tech stocks continue to go up, or I'm going to sit in here and try to, play a value trade that may not catch fire for another month or two. I think it's the latter, or the prior. I don't think IWM's just got this imminent turnaround until we actually see TLT start to rise and rates start to go down.
All right. Thanks again to Christian. Dennis, thanks for coming on. We're going to go up. The S&P's up 22 handles here, 44.93.75. IWM performing well. Let's see if we can get to those pre-market highs. We'll be hearing from Mark Chaikin tomorrow, Chaikin Analytics. Folks, thanks for joining me today, helping the show go smoothly. We'll be back with you tomorrow morning.